Hello, my name is Steve Bigelow with the Candlestick Forum. The market is now at a important point, which is that after the sell signals up here in the overbought condition, the markets have traded positive today, and the Dow, as well as the NASDAQ, S&P, and the transportation index are making the T-line a very viable factor, which means if they start trading positive tomorrow, now we're more looking at a J-hook pattern that's not staying down below the T-line. On the other hand, if they open it and trade it lower, tells us our downtrend is still in progress. So it's going to be important to see how the pre-market futures are showing how the markets are opening. If the pre-market futures are positive, any short positions that are starting to show too much strength, you want to cover them. And there are some strong sectors still working in this market that have been producing good profits. But the strength of the candlestick signals are what really becomes illustrated based upon what the market direction is. Notice our recommendation on AXSM was based upon this gap up best friend signal through this level, telling us wave 3 was in progress. So as you saw, other than today, the market drifting lower, the strength of this stock was still positive because of the strength of this signal. Same scenario, the strength of our short recommendation on EEFT was based upon the bearish best friend. And notice when the market was up 300 points today plus, it was still trading lower because of the strength. This is what gives you an advantage of knowing what each individual candlestick signal illustrates. So it kind of dissipates the effect of the overall market. The stock price is going to be the most critical or crucial analysis. So we can find the strong sectors based upon analyzing what might affect that sector. As we can see in crude oil, it's basing down here. When it hit the 200-day moving average, started coming back up. So it hit a low of, I think it was around 88. Now we're back up into the 93 area. But more importantly, it's telling us that this price of crude oil is starting to base. And if it does get up through this level, this is going to be an important assessment indicator for everybody's analyzing what the market is doing in general, not just crude oil, but the market. Because if crude oil starts heading higher, which was an integral part of the inflation, that means inflation's not diminishing. Gas prices are going to stay high, and that's going to mean interest rates or inflation is staying high. That means the Feds have to do something about interest rates to offset it. So that becomes a major factor of what the overall market trend will do. But on an individual basis, a strong sector continues to be the crude oil stocks. Our recommendation on WTI was based upon the fry pan bottom and the J-hook, the classic pattern. And how long do we hold this stock? The T-line rule. As long as we don't see a sell signal and a close back below the T-line, we stay long. You're going to see other stocks in that sector like ConocoPhillips, Exxon, Apache, Occidental. They're all in uptrends. And that's another strong indicator that when all of, or say a stock, when a lot of the stocks in a certain sector are trading positive, that means the big money is buying that sector across the board. Same scenario here on the lithium mining stocks. We've got some good trades going on because of the pattern breakouts. Look at our bobble breakout right here, where we had selling when it first came up to the 50, the J-hook pattern that couldn't really close below the T-line. Wave 1, wave 2, wave 3. Wave 1, wave 2, J-hook pattern, wave 3. Now, the J-hook patterns add some strength to a trend because that tells you there's not exuberance coming in. They're taking profits along the way and continuing the uptrend, making a much more solid trend. But this bobble breakout is very indicative of what the next price move is likely to be. We recommended IMVT because there's your J-hook pattern bobble breakout. So even with the market with lollygagging over the next few days or past few days, the bobble breakout illustrates that there's strong bullish sentiment because we may be watching the J-hook pattern. Everybody and their brother is watching to see what's happening at the 200 and seeing that when it went through, that's the time to be buying. Candlestick signals also provide a valuable facet as far as giving you an alert, illustrating when there's been a major change of investor sentiment, and then allowing to see whether that change of investor sentiment is going to continue. So not only do we have a breakout alert, which would put us in our rare process, meaning research analysis, reverse engineering, seeing what the news was on this, and then seeing what the T-line and the signals are doing after that to give us a high probability, especially on a bullish flutter kicker signal, also a very strong bullish signal, telling us there's probably a lot more upside. All this really does is help the candlestick investor see when there's something new happening in a stock and be able to participate in that new price move. NVIDIA, a bullish engulfing signal. What's so relevant about that? Because they did it once again right here off the 50-day moving average, closed above the T-line. That's just extremely high probability visualization that this is where they were using as support. They like the earnings, should be more upside. Same scenario on a QuantumScape, bullish engulfing signal, right smack dab at the level that they used as support before. Did a doji today. This is where you put your 2+2 analysis in place. If they open this positive tomorrow, after a strong buy signal off of 50, which everybody else is watching, got a doji sandwich telling us our uptrend is in progress. There's nothing difficult about candlestick analysis. Once you understand what the signals are telling you and that the results usually produce high probability trade setups, you're just putting the probabilities in your favor every time you put on a trade. So it'll be important to see how they open these markets tomorrow. If they open them positive, now we can anticipate a J-hook pattern, more upside. If they open it lower, still indicating that we're below the T-line, we're still in a downtrend. So learn this by using our 2-week free trial and our website and our chat rooms. You get a heck of a lot of good information out of our chat rooms because there's a lot of people in there that know what the charts are telling you and identify which ones are producing good trades. Just giving you not only a good supply of trade setups constantly, but also if you're still learning candlestick analysis, you get the explanations of why those trades are working. So your learning process goes a heck of a lot quicker. That'll be it. We'll see you in the chat rooms.